Hey traders, welcome to a YouTube live here. So in this one, we're going to be talking about BTC. We got the monthly to close for January, starting the new month off, which is very exciting. So we're going to first talk about that monthly bullish candle closure, breaking the key level of resistance, and then what that could mean for the price. Now let's first get our snip here and initially discuss what we're able to understand and able to see on the monthly chart. So first things first, we broke that key level of descending resistance. We see that well respected all along here, very, very well respected, and that broke on the monthly, which is a very significant zone. Like we can see within the previous resistances that squeezed the price towards a zone and the key level of ascending curve support that we've been holding since 2011 is that we've broken to the upside every single time. We see the initial one right here. We can draw them all before. We can see one right here and there's one previously, but just looking at what we can see on the chart right now, we see this is the first zone we can identify is the anchor point, and then the first key level and the second key level, and then we see the price break, retest the zone of confluence perfectly, where it is a level of support from the previously broken resistance, as well as the curve support there. Once we bounce off that, we initially get 2 months of very bullish action, and then we get a horizontal resistance that we held for a little while there, squeezing the price closer to the apex of the pattern, which is right here. The price broke above, retested as a new level of support, and then blasted off into 2017, or I guess the end of 2016, and then the end of 2017 was an absolute monster move. So overall, sorry, I got a bit of a nose running here, but overall we do see that when the price does break key levels on the monthly chart, we get a strong reaction from either the bulls or bears, depending on which way the price breaks. But for their key zones, squeezing the price towards the apex, which is going to be zones like here, zones like here, zones like here, and zones like we just passed, we are going to get a strong sensitivity and a strong movement from the bulls. And that's exactly what we've been seeing so far. Now, in terms of where we could potentially see a reversal, obviously we don't know exactly where that is, but just looking at the overall picture of the chart, it definitely seems like the 12K, 11.5K range seems like a good possible situation where we could have a zone of resistance hold the price below a certain area. So what I'm thinking on the overall time frame is we could see a move sort of like this, where we can see the price create a horizontal zone like we see here, horizontal zone, and the price is making higher lows. We see a low right here, we see this low right here, and then we could see one more low come in, testing the ascending support once more. So I'm not entirely full on force creating a bullish parabolic move, but I am seeing that there is more bullish volume coming into the market, creating a nice higher low. And this means breaking the resistance here could indicate that there is strong level of buy pressure, which we've seen, and it could still have some to come here until we hit our key level of resistance, and then we'll have to reevaluate. So overall, looking at the monthly, it looks very bullish. It looks like the bulls have taken control of the market and have confidence and have conviction that the price is still going to be appreciating in the near future. So overall, that's what I'm seeing in the market on the bigger macro aspect of the chart. Taking it down to the weekly, we can see we still got a strong bullish push to our mid-range zone, and let's just discuss. We got our key level of support there at the $78-ish $100 area, and then we got our key level of supply there around 12K. We discussed this within the monthly chart, talking about this potentially being the resistance that we could see bounce off, and then the price may come back down and retest that ascending green support, which we talked about on the monthly. So I think we still got some room here to fill that little gap area there, and that's where my current bias is. Now, we could get a reversal. That is a possibility where we have the resistance hold right there, and we do have a hedge, because what we're looking for is to get from gap to gap. We got from the demand zone to the supply zone very well. We hit all the take profits we wanted to at the $90-$100 mark. But overall, that's what we're looking for in terms of being a swing trader. We're looking for gap to gap. So right now, we're at the mid-range zone, and ideally what we're looking for is to see us hold the price from the mid-range gap to the top gap if we get a confirmation that the bulls are going to be back in the market, taking charge, looking to enter to push that price to our next area of resistance. But for now, we're currently sitting right at a zone of resistance. How do we know that? We can see it's a previous level of resistance. Back in the middle of 2019, it was a very strong level of support as well as resistance. And then looking back all the way to 2018, we see it initially as a previous level of resistance and support and support and resistance. So it's a well-respected zone within the chart back in 2018 as well as 2019. So we can identify that as being a potential zone of sensitivity in the future. And that's where we currently are right now. So now that we discussed the overarching weekly and monthly, we can now talk about the daily chart, which is a little less exciting because we've been just into consolidation. We won't really get into the CME futures until we get to see it open. Depending on how the gap is looking, it may be looking like a possible opportunity. But if we're just in consolidation within the current zones that we're currently in, there's not going to be a whole lot to talk about within the CME futures. But talking about just the daily chart in general, let's just get our snip here. Excuse my sniffles. So after breaking the descending trend line here, we've had our initial solid push, pullback, testing our key zone of demand, and it was a zone of confluence. And then we got our second push, and then we got a pullback, and then we got our last final push for the Elliott wave 1, 2, 3, 4, 5. And now we're in a nice tight consolidation just above the previous high. So to me, on the 4-hour, we can really clearly see that it's a cup and handle, which a cup and handle is, and it's a trending market. We get a long looping pullback and then the rise back up. And then we get the break of the previous resistance, which is right here. We either get a consolidation below or above. In this certain circumstance, we got both a consolidation below the resistance as well as above the resistance, creating a new level of support. This is a previous resistance. This is a new level of support. And that's where we currently are right now, is this zone right here. And we're going to talk about that on the 4-hour. But what we could see is another pullback. But for me, that nice cup and handle with the pullback, previous level of resistance, new level of support does look more bullish to me. So that's the 4-hour chart aspect. This is what it looks on the 4-hour chart right here. And that's why I'm a little bit more bullish in terms of the upcoming price action we could see. But what we want to really ensure that if we are actually entering long here, it's a pretty big gap in order for us to go from zone to zone. We went from initial zone to initial zone right here, which was a very strong trade. But for the next zone, we are already in a really strong bullish momentum. So ideally, we'd want to see the price verify that we're within our new range, which is the around 12K range to the, let's say, 9.5 or 9.2K range. And we ideally would like to see a push, testing and holding on the daily chart or 4-hour chart above the zone and retesting potentially twice as a new level of support. Then we can really look to have a confirmation of the move to the upside. And obviously, within that whole time frame, we will be looking for alts to long as well, having sympathy plays within the market. But just to say that we've entered here and we're going to make our next take profit here is a little bit much, I'd say. But we are looking still to gain some exposure to get from mid-range zone to supply zone. And that's the overarching bias that we have, is we could see a consolidation here. But on the overall picture of things, we could definitely see the price come to our next zone of supply. So that's the bias that we're having, and that's why we're making the decisions that we're making on the smaller timeframes, as well as looking at the different alts. So let's now go to that cup and handle. So we've already talked about the flow of the 4-hour, and we'll just discuss it again really quickly. So here's that cup and handle. We initially got a rejection off the resistance. We broke through, and now we are retesting as a new level of support. That looks pretty darn healthy, and we'll talk about what a potential breakout could look like on the 1-hour. But this is the flow of the market that we're currently seeing. On the daily chart, we're breaking those resistances, holding supports. On the 4-hour, looks pretty bullish. We got a nice cup and handle candle closure above the resistance, tested for support multiple times, and the volume is looking like it's in volume accumulation, meaning there's more buyers than sellers. So overall, it looks pretty darn good. And then we can discuss on the 1-hour chart what we're able to identify as minor levels of descending resistance, which could then play out as a good catalyst for a potential move to the upside. So let's talk about flow just one more time. So we know that this area right here is going to be our key level of demand because it was a key level of resistance before. So we can see there's buyers within the area pushing the price right back up to the consolidation area. We can clearly identify that. So right now we are making lower highs at this point. This is a zone of confluence because we have the horizontal resistance as well as the descending resistance, which is potentially going to give us our descending triangle, which is going to connect the lower highs while holding our horizontal demand zone. Excuse me, just going to get some water here. Now, once we see the price come towards the apex of the pattern, which is here, the price has to make a decision. It's either going to move to the upside or it's going to move to the downside. Because of the macro bias that we have going from top down, we're looking to make a move to the upside. We already have hedged positions in case the price doesn't do that, but our bias is going to be on a long side, although if we do see the short side, we'll play with that as well. So regardless of what happens, this is our plan. Let's say we move to the upside. Initially, we're probably going to get some level of rejection or some level of sensitivity from this zone. Ideally, we'd want to see the price initially break this descending resistance and then also respect it for a new level of support. Once that has been verified, we can then have a higher dependability on this trend line and use it within our trade. So let's say this happens, we could then look to potentially enter once this zone gets validated as a new area of support. Then we will have the same level of resistance that we need to pass. If we're able to pass that zone, then it's going to be looking very, very favorable for the bulls to start gaining back their confidence. But that is how the overall structure of a long trade would be, in my view. And we do see some little bit of the higher lows there, so we could draw a trend line connecting potentially this zone and this zone and this zone. I know it's not straight, but we could see a nice squeeze here as well. And if we see the if we see the ascending zone break, we could see the price come back down here and just use a horizontal zone to potentially break here, and then we'd look for an entry on the pullback, and then we'd look for even a possible entry on a pullback like so if we do pull back and retest the previous level of resistance as a new level of support. So that's what potentially could look like for a long opportunity. For a short opportunity, if we do reject off these zones and the price comes back and tests these previous lows here, and then it pushes down, breaks it on the 4 hours, and we're seeing a candle closure on the 4 hour and 1 hour below our new level of support, and then we retest and confirm that there are sellers at the previous zone of support, which is a new level of resistance, and it's a zone of confluence because we have this zone acting as a resistance, and we have the descending zone acting as a resistance. And if we're able to get that nice zone of confluence to confirm that there are sellers within the market, then we can look to definitely enter short at this point. But there's a lot of things that need to play out before we jump back in and enter on BTC. We already have trades lined up with a couple alts. But overall, that is how we're looking at the markets right now. If something happens that is very out of the ordinary, we will act accordingly. Or if it's something that we're not really expecting, we just won't do anything and we won't expose ourselves to the market's risk without really diving in and trying to understand what potentially could be at play and what probabilities we could be seeing for us to capture profits. So I hope you guys and girls liked that TA side. We will then go into the different tools that we use in order to actually analyze Bitcoin. And those tools will be using the coin farm, looking at the different exchanges and how the long short percentages, as well as a visual chart showing that as well. So this is what I'm talking about. Sorry for my nose here, it's very runny at this point. So we see that we have multiple exchanges here, and we also have the long short for both the 24-hour and the hour. So we got BitMEX, Binance, and Bybit. These are the three exchanges that I'm mainly looking at because we have so much volume in them compared to the other exchanges. That's mainly why I'm using the top three exchanges for my analysis. So let's just look at them real quick. The 24-hour, we see that there is more buyers on BitMEX, but on Binance and Bybit, we have slightly a bit more sellers than buyers overall. We can see that percentage right here. BitMEX has 51.7% longs, while 48.3% shorts. And then on Binance, we see 49.9% longs and 50.1% shorts. In Bybit, we see 48% of people that are shorting and 51.7% of people that are longing. So on the daily, it does look like there's a little bit more short sellers than longers or buyers. But what's surprising is within the hour chart, we see a lot more short sellers compared to the buyers, significantly more. On BitMEX, we're only seeing 36.3% of people actually buying or longing, and we see 63, almost 64% of people actually shorting. That's a pretty big discrepancy between the longs and shorts. On the 1 hour for Binance, we see 42% basically for the longs and then 58% for the shorts. And on Bybit, we see 40.3% for the longs and 59.7% for the shorts. So we are seeing a lot more short sellers than buyers within this current market, which would then potentially have the price shift down back to this area here, and that would actually be a pretty good situation for us because then that would validate the descending trend line just a little bit more, which would then give us a bit more dependability for that trend line, which is always a good thing. So we see if the price does come back down below the previous lows there, that would really show off the nice descending triangle, which would be a pretty dependable price action pattern that we could rely on to use as a potential opportunity within this market. So that's what we're seeing right now within the long shorts within different exchanges. And then now for a overview of the longer visual chart that we're able to see. This is just for Bitfinex, meaning that we don't have all the exchanges on here. Remember that we talked about we only had a few exchanges, but this is just Bitfinex's longer term chart for the buyers and sellers. So we can see this goes all the way back to 2018, and we've been having a lot of consolidation within this zone, but recently we're seeing a very volatile time for the buyers and sellers within the market. We saw a monster move, such significant amount of buyers entering the price, breaking basically all resistances. Once we saw that, we did need a correction back down, and what's exciting is the previous level of resistance is going to be a new level of support. This is a previous level of resistance. It's now going to be a new level of support because first off, we have the horizontal zone, and also there's a trend line connecting the higher lows, creating a confluence zone for the buyers to be holding the price above. So overall, it does look a little bit more bullish biased, because previous level of resistance, new level of support, zone of confluence where we're currently holding double bottom, which is a pretty good bullish confirmation of a potential shift in trend, especially we broken above the minor level of resistance there. So overall, on the bigger aspect of the chart for the longs versus shorts, it does look a little bit more bullish, which is good to see. So that is the overall aspect and overall structure that I am looking at BTC with in that lens of using all the different tools we have, using the different time frames that we're able to use, going from the monthly, weekly, daily, 4-hour, hour chart. We like to go to the top-down approach while analyzing the longs and shorts within the market. That is our approach. That is how we use our tools and our methods in order to try to capture profits within the market. I hope you guys and girls enjoyed it. If you have any questions about our methods, if you have any questions about our style of analysis, anything in between, we'd love to give you answers. We'd love to help you out. If you want to learn how to trade like us, enter the Discord. It's absolutely free to join. If you'd like to get one-on-one mentorships, yes, that does cost a monthly subscription, but we provide a tremendous amount of value upfront, and it's really $30 for the first month, which in our view is a very, very cheap price for the amount of value and education that will be provided with you, which you can use within really any asset class you'd like. So a bit of a pitch there. And if you like anything else, you can always cancel at any time. It's a monthly cost, so if you enjoy it, that's great. If not, give us some feedback and go on your merry way if you are unhappy with the way we trade. But this is exactly how we trade. Simple support and resistance using key areas of confluence, and we like to keep it simple and clean. So I hope you liked this week's BTC review. We do them multiple times a week, but this is the weekend. So we'd like to wrap it up, do a full analysis, because usually the weekend provides a little bit less volume because the major exchanges are not going to be trading, talking about BACT and CME futures, and those will be back up on the Sunday. So bit of the lag slow time here, which is not a problem. We're just going to be basically not doing anything until we see the price come to a favorable area where we have a higher probability chance. But right now, we're just sitting on our hands, not doing anything, and waiting for the price to basically come to a zone where we feel is a good area to either long or short. So I hope you enjoyed it, and until next time, happy trading.